Okay, we're going to get started in just a few minutes. Hi, guys. It's Dr. Greg McLeod from Elite Traders University. So good to be with you here on this wonderful, wonderful. I'm going to. We're on our homepage. We're going to go here and place that right in here. And we're going to get. All right. Let's okay. Hey guys, we're live. Hey, welcome to Facebook Live. Just doing a quick sound check, video check, make sure that you can hear my voice and see my screen. I start early enough where we can iron out all the technical gremlins that could possibly pop up. And I think that we are on the page, and we have a chat, a Thursday chat should be open, and you should be able to access that as well. Okay. And we'll go ahead and approve this person. Fantastic. Hope you guys doing well. Welcome, welcome. Hi, this is Dr. Greg McLeod. Just going to do a quick sound check, video check. If you can hear my voice and see my screen, go ahead and type a Y in the chat box. Type a number 1. Let me know that you're out there, that you can hear me, and that you can see me. And we'll get started in just a couple of minutes. We'll start right on the button at 7 p.m. I'm going to talk to you about the power, the magic of moving averages, right? I'm going to reveal some of the secrets I've used over the years to use this mostly on, has moving averages have gotten a bad rap because, a lot of people say they're lag and, they're not good for anything. But there's some really specific things that we can use moving averages for in order to help us find low risk opportunities to trade with the trend and to give us some indication of the trend direction, support and resistance. And I'm going to go over those things, and then we'll have a little Q&A at the end and to see if you have any questions about the market, the things that are going on, right? And I always find moving averages is like our first line of defense, a way of, giving us a visual representation of the direction of the trend. Okay. And so we're actually going to look at some real-time examples from various trading instruments, whether it's the euro, whether it's the U.S. stock market, other things. We'll talk about the typical moving averages that we use for determining trend direction, and also different ways we can use them to give us a high probability success, right? Now, moving averages, they have the drawback, the way they use them. When you use them when they're too small, they become very choppy. There's ways of using them when they are choppy. It gives us an indication that price is getting ready to break out, right? So we can use those, especially if you're using like an opening range breakout type of strategy. You're going to find that those moving averages are going to twist around and form what we call a braid. We're also going to use something called guppy moving averages, where we actually take a number of those moving averages together and create a net, for price, which forms like a little basket, like a basket that holds price. And it'll be very pretty when you see it on a chart. I'll show you how to make that, and how you can maybe save that template. You can use it in whether you're using MT4 or if you're using some other platform. It'll be very useful for you, okay? And also to tell you the difference between exponential and simple. There are a lot of different ones, and we'll talk about that as well. So I just want to make sure that you can, the purpose is to take moving averages to the next level, to give you some of the basics, even a simple system that we can use with moving averages. If you don't have a system, if you don't have pip and run, right? It's not a replacement for pip and run, but not by any stretch of the imagination. Now, pip and run, I've been using for over 20 years, has one of the most brilliant ways of entering the trade is using something called the predictive function. And the predictive function allows us to get into the market 4, 5, 6 bars ahead of the crowd, and that allows us to see where this institutional order flow, where institutions know, guys, you got to understand, this is not a fair game. It's not a fair fight. And many of our traders you're coming to a gunfight with a butter knife or with a water pistol. You're just outgunned by the billions of dollars flowing out there in machines and server farms and highly educated traders, analysts, and the full gamut of Wall Street, which I was part of, right? So I know what you're up against. And so you have to use different tactics in order to get the jump on what the banks are doing, the market makers are doing, right? So there's some cheat things that we can do, bending and twisting some of these existing strategies and indicators to give us that type of competitive advantage, okay? So we're never going to get the exact advantage that they have. We get really close, and being really close to what they're doing allows us to make a lot of money, right? So I know someone contacted me and I say, "What do you think about order blocks?" I go, "I don't use them. I mean, I play with Legos sometimes with my nieces and nephews, or with my kids when they were young, but I don't do anything with blocks. I don't do any. I make fun. I know it's not Roblox or Minecraft, but those are gimmicks, right? They're gimmicks. They're shiny objects to take your attention off what's really happening, and if they work, then everyone would be a millionaire, right? But they're not. So anyway, I'm just kind of like filling up some space to make sure we got everyone here, and we'll go right into, we're going to talk about moving averages, right? And a moving average, I'm actually going to share my screen. I'm going to share the home screen, which could get kind of interesting. So we're going to share screen one. We're going to share screen one. We're going to go plot, and then I'm going to bring up a okay. So when we're talking about moving averages, I'm going to use my whiteboard here, right? And we're talking about moving average. We have price, price that, maybe it's an uptrending price, right? And it's making higher highs and higher lows. And if you have price moving up, if you put a moving average on it, basically what a moving average does, it looks back so many bars, whether it's a 21 period moving average or 50 period moving average. I mean, the typical settings, you have some people use a 10 MA. If it's just MA by itself, it's a simple, we call a simple moving average, simple. Okay. And a simple moving average goes back 10 bars, it counts back 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, adds those up, and then draws a line, right? So its price can be above this 10 period moving average, right? I really should make it another color, right? So when it's above its moving average. So think of the moving average like your GPA, right? The grade point average, right? The best GPA is what, right? Unless you have it's 4.0, unless you have some type of AP or honors class, and it's a 5-point scale now. 4.0, right? Now, if I have a test and I get an F on it because I had a bad day, that's a 0, right? And what's that going to do? That's going to take my average down. Maybe my average drops down to what? Maybe 3.8, right? And I don't do so good in the next test either. I get a D, and then it's dropping. So now maybe it's a 3.5, right? And maybe I take another test and I get another F. I'm just having a really bad semester, right? So what's happening to my GPA? It was up, right? But as what's going on, though, it's trending down. In fact, if this is my average, I'm now what? Below my average, right? And if I were in school and I was a stock, you would probably sell me, right? Because now I'm getting a trend. We went from 4.0 to 3.8 to 3.5. And now you can draw a trend line and probably say, well, this thing I could probably go down to 2.0, right? And so the moving average, with prices above its moving average, it's telling us that it's bullish, right? And when price is below its moving average, right, then we say it's bearish, right? So let's say I'm going to have maybe have a moving average like this, right? and price, or make price black, right? And price is maybe gets a little bit above its moving average and drops and hits and drops because it's going below its average, right? So the moving average can act as support in an uptrend. Support. In fact, when price comes and touches a moving average, it can give us a buy signal, right? Usually when we get a touch, we have buy signals when price comes close to the, right? Similarly, when we have a moving average here, price rallies up and gives us a sell signal, right? So it acts as resistance in a downtrend. Right. And so if we see the moving average is moving down, then it gives us a good indication that we should not buy, but we should sell, right? So one of the way, again, we can use it as support and resistance. Support, resistance, right? And what else we can use it for? I'll show you, right? So we have trend direction. So we have whatever if the moving average is moving up, it gives us trend direction. Or if it's moving down, it's giving us a bearish direction, right? The moving average. So we got trend direction. We can use it as support. And we can use it for resistance. We can also measure if price is actually volatile, if it's alive, right? And now so enough of the this type of chart. Let's get into let's put some meat on the bones here and show you an actual chart. And let me go ahead and bring this over and bring that over to, and then we're going to go to one chart and all indicators and all drawings. And we'll see if I can bring this over. Okay. And I know what I look like, right? So here we go. So I'm just going to take, for instance, we're going to take, let's go take the Euro USD, EUR USD, right? And we can see, and we're going to start off, we can this is a great chart right here. This is a 30-minute chart, right? And I like, when I'm scalping the market, I want to look at the 30-minute trend, okay? So I'm going to give you this, I'm going to give you a little piece of pip and run. And this will help you out. If you're a short-term trader, you're trying to do the short-term trading thing, and it's not working, you're frustrated, no matter what you're doing, you're getting like out of the market, right? So I have this price chart, and you can, it's kind of messy. It's going up, it's going down. So this is how moving averages can help you, right? I'm going to put two moving averages on, right? First of all, I'm going to put one moving average just to show you what's going on with moving averages. Now, moving average, price itself is a moving average, right? Moving average of itself. Moving average with value of 1. Because 1 times anything is the same, right? So it's a moving average value of 1. And as you add moving averages, you'll get all kinds of really cool little patterns, which are going to be helpful, okay? So I'm going to go to indicators here, and we want moving average. And now the simple one has a little, it lags a little bit more, but the banks use simple because simple moving averages are the first ones that ever came out. Exponential, when computers came about, when people started using more complicated calculations, they use exponential. The difference is, if I put a 20-period simple moving average, okay, this is going to be a 9. I'm going to change that. You're not gonna be able to see that. So you have to go into the settings, change inputs. We're gonna just change it to a 20, right? And sometimes I'll use Fibonacci numbers, like I'll make it 21, right? Make a 21 moving average. Then I'll make it a little bit thicker so we can see it, right? And then I'll make it like yellow, right? So you can see that when the moving average is moving sideways, well, price is moving sideways. There's not a real advantage here. But when price breaks below the moving average, right, significantly, right? Because right now it's moving sideways. Then price, we get a little break here, and finally, look, that's a signal that could get you into a trade. And I'm using Heikin-Ashi. You guys, I know some of you guys out there don't want Heikin-Ashi, but it's what we use. But I'm going to switch it to regular candles. So you're like, I don't understand, Greg. No worries, right? So this is what we get. Price rallied above the moving average. Then I got below the moving average, and then we had successive closes below the moving average, right? That is a bearish sign, right? But when the price crosses above the moving average, well, it gave us a little bit of a push up. And I noticed how we double touched the moving average here and here, right? Price snaps back above the moving average, right? And then, so it gives us this kind of, that 20 period moving average gives us a kind of a heads up of what's going to happen. It's very reactive. Like here, we have price breaking. It was in a downtrend. Then price breaks above the moving average, drops back down, but can't stay above the moving average. So the moving average here acts like a trend line. That's another thing that a moving average, if I were to draw a trend line, guess what? This is like acts like an automatic trend line. And if I got long here and wrote it up, and look, price bouncing off there, that's an entry. So now I have something that can help me get an entry. I know my pip and run people like going, Greg, don't tell them all the secrets. Like, come on, there's plenty of money. Tell people out. So pay attention. That would be an entry. Price coming back to the moving average. Tested it and rallied. Even this might have been some type of an entry too, right? And then price rallied above the moving average. Now, the space between price and moving average is wide. And this is how we get a lot of our oscillators like MACD and stochastics. The space between the price is like a dog on a leash. It's getting off the path, right? It's getting stronger and stronger. But now, look, price is getting weaker. Then it drops below, right? Makes one more push up. But look, a long wick. Look at that wick. And then price comes back down below the moving average, breaks to a new low, and that should get us out of this trade, right? Because they'll save some money. So trying to squeeze every single last pip out of the market, what we can do is actually look to get out of the market and then either look to see if we want to take it short or not, right? So we can use that again. We can use moving average as a signal to get in and to get out of the market. Yeah, it's a little late, but it could be a little early. Here's a crossover here, but we didn't squeeze all the trend, but we squeeze a good piece of the trend, right? Here, right? Using a 21 period, a simple moving average. Now I'm going to add a shorter term moving average that's more closely related to price. And let's say I'm going to use another fib number. I'm going to use an 8 period moving average, or you use an 8 or a 5. So I go back here, go back to indicators, and I'm going to go to moving average. And again, my simple moving average. And it defaults as 9. Just go to settings. I'm going to go to inputs. I'm going to change it to 8, right? I'll change it to 8, right? And make it a little bit thicker, right? Style, get some style, right? And then and what I like to do, I'm a big color guy. I like I like maybe a green. Like I know it matches the candles. We can leave it blue. We can leave it like a blue right there, right? So now we have a simple system, guys. Look at this. Look at this system. Look at the system I created, right? It's a simple system. It's not perfect, right? But if you find yourself on the wrong side of the trade, like, I had someone that was long Bitcoin. I'm like going, why were you long? Oh, because I'm going to hold long-term holds. Like going, I don't know. I think it's going to go down. I took it short, right? And I got paid. But I have X-ray vision. Sometimes I can see this stuff. It's like Luke Skywalker flying through to the Death Star. He has the crosshairs up. He's got the computer lock, and he hears a voice in his head. Use the Force, Luke. Use the Force. What does he do? He turns off all the indicators and crosshairs, and he fires that torpedo. Ooh, and the Death Star blows up. Right. So you get to the point where you're using all this stuff to train you, so you get you get more of an intuitive feel of the market. So shorter time frame, our moving average is our 8. The longer time frame is the 21. The 8 represents short-term traders. The 21 represents longer-term traders, right? So when you get this cross, blue over yellow, it's a buy. And the moment they stay apart, boom, when they come together, we're getting out. And look, blue goes below yellow, sell. Look at that. Nice. Right. And then like here, yes, we missed part of it. Yes, it's a little late. But you know what? If you're on the wrong side of the trade, you're still trying to short this, wouldn't you rather be late and be right than be early and be wrong? Right? So again, it's not the most, it's not going to get you pip and run like entries. Like we would have entered like way over here, and would have seen it coming ahead of time. But this will keep you on the right side of the market. It's very visual, right? Shorter time frame, above larger, that's a buy. Because remember, the price itself is moving average 1, right? So this is a 1. And this is a 1 over an 8 over a 21 when they stack. Now let's add another one on. We'll add we can add a 21. We can add a 34. That's Rocky Horner's favorite. Rocky Horner's a famous trader. She used the 34. I just use one, in Pip and Run, we use a 200 simple moving average. We're not up there yet, but I'll tell you how we moving average, right? Moving average simple, right? And we're going to change this. We use a 34. I'm stick with those Fibonacci numbers. 34. We get 34, and then we're going to off the close, style it. We make another color. We can make it like maybe an orange or something, right? And we'll give us the style, right? So now we have a 34. Now look at that. Now that gets pretty, right? Now it's like, gee, this is very. Tell me in the chat box. Is this helpful or is this helpful, right? Let me know. Scott's in there. Gave me a thumbs up. Thanks, Scott Fields. Big shout out to you. Big shout out to Sean. Gave me a thumbs up. Give me a like. Awesome, awesome. Very cool, very cool. Okay. And I'm trying to get back to my trying to get back into the room. Right. There we go. Okay. And you guys are okay. I want to make sure if you have any. So here's so now we've got this. We have an 8, a 21, and a 34. And look at that band, right? And look where it comes together. When it comes together, it's telling you get a change of trend, and it drops, then you got this change of trend. Now here, this is where it gets messy. Moving averages aren't going to help you, except when they twist around sideways like that. That's a good sign that we're going to get breakouts. Look, breakout, 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 right? And then finally we break, and that 9, that 8 moves below the 34 and 21. That short-term traders getting out. Long-term traders are starting to change their positions. And now look at this. And look at that. Perfect entry. This is one of our pip and run perfect entry zones that we don't use moving averages to find it, but if you're in pip and run, you know, yeah, that's exactly where we've gotten short, right? So there you go. You got that. You got your short. This is where you would get short, guys. You guys see that? That makes sense? Have you guys seen, you know, see that was our perfect entry zone, a nest right there. When you get a confluence of moving averages to one point, it's gonna confluence at Fibonacci points. There's all kinds of things going on at that point, right? And the moving averages are a very simple graphical way. You don't have to buy high-powered indicators, right? You got this, just add a moving average, right? And what happens if you add another one, right? And there's more, right? It's like those infomercials. It slices, it dices, well, it purees. It makes julienne fries. The Ronco moving average, seal a meal, right? So we're gonna add another indicator here. Simple moving average, 34. Let's do oh, hello. Oh, we gotta change that. We're gonna change it to a 55. We're representing still longer term traders, right? 55, we'll give some style. We'll give it maybe let's do a red one, and then we're gonna thicken her up a little bit, right? We get a little bit. I like them thick. How about you? No, skate. Look at that, right? So now we're at 55, and look at that. Look at that nest, that like basket. It's like a little cradle, right? See that cradle? Right? Don't try to be a hero jumping in front of that. Wait till those things expand like fingers. They fan out. When they start to fan out, that's going to be where you want to get in the market, right? And prices are going to move. Their prices trend 20% of the time. They range 80% of the time. So there's your trend, 20% of the time. Here's your range, 80% of the time. And then it starts trending again, right? But see how look, a nice cluster of moving averages. You know, this is where, oh man, the market's not really moving. It's going so choppy, and oh, I'm so tired. I think we're gonna go to sleep. And when you go to sleep, that thing breaks out and drops, right? When we have low volatility, price compression leads to high volatility. So we go from compression, expansion, compression, expansion. It's breathing in, breathing out. Can you see it? Breathe in, breathe out. Breathe in, breathe out, right? And so now we're in this kind of a tight little nest here, right? Something's going to happen. Something's going to happen, right? And we got three drives to a top, 3 drives to a bottom. We got 1, 2, 3, 4, 5 drives. I don't know. 5 drives. No, not 5 guys. Oh, making me hungry. I want a cheeseburger. 5 guys, right? 5 drives, right? People talk about 3 drives to a bottom. I've seen 5 and 7 drives in this type of market, right? So we have a nest. And each time we have a nest and a breakout is huge. A nest, a breakout, and it's almost like it's running out of steam, right? It's running out of steam. So maybe, and people go, oh, it's going to, and then that last one they try to short, maybe this rallies up and breaks out. You know, I don't know, right? But I'm not, without pip and run, without the predictive function, if I'm just using this, I can wait. Because if I get this candle right here, and my risk reward is here, I don't care. If I miss that candle, that's fine. But I'm breaking outside the band of the nested moving average. I got an entry right there, and I let it run. And as long as I stay below, I can use this as my trailing stop. I can use, look, I'm using this moving average here, this 8-period moving average. The moment we cross back above the 8, I'm out, right? So I have a concrete way to get me in the market and a way to get me out of the market. That's the definition of a system, okay? Is it the best system in the world? Is it as good as pip and run? By no means at all. But I tell you, it's better than probably what you're using right now. And it's a lot cheaper than what you're using right now. Okay. So, I mean, and on the bull side, it's like, you flip that around. So let's look at Bitcoin for BTC USD. Okay. So we have this drop, sideways consolidation. This is Bitcoin. Bitcoin did the same thing, right? It did, look, I mean, and it actually did really nice. Look at that. Multiple rounding top, cluster, break, and the moving averages fanned out. We did a 55. Now let's get into some of the bigger numbers that people like using for moving averages. They like using the 100 and the 200, right? So I'm going to add the 100 and 200 on top of these, right? And okay, I'm going to add one more. Moving average simple, right? And so I'm going to change that to inputs, and just these are not fib numbers, they're just people like looking at the 100, right? And off the close, right? And then we can go ahead and maybe add maybe like a purple or something. Yeah, that's good. Make it a little bit thicker, and then okay, so we got that one, and then the 200, which is the one I like using. Let me go here and change this over to SMA. I go to the gear, go to inputs. I'm going to change this to 200. The 200 moving average is one of the most widely watched indicators in technical analysis. Why? On a daily chart, there's 200 trading days. So basically, when price is above the 200 on a daily chart, it represents it's above its yearly average, right? So bulls live above the 200, bears live below the 200. So on the daily chart. And sometimes with TradingView, you can actually put the 200 daily and have it show up on other time frames, which is very cool indeed, right? So I'm going to maybe use a different color. Maybe this is a blue, big blue, and make it a little bit thicker. And there we go. Right. So this is on a 30-minute time frame here. And you can see that, when this is the big daddy here, the 200. It's the last one to move, right? And it's gonna be a little late, right? But your 100, your 200, your 55, your 34, your 9, or your 8, your 21, right? And then so let's go through the time frames and how this actually looks. Let's start with monthly. Well, we're not gonna have much data on the monthly, right? Let's go to a weekly. Actually, let's go to let's go to AUD USD, one of my favorite pairs to trade, proxy for risk. In the stock market, very closely tied, right? And here's a weekly chart, right? I'm going to remove all drawings, right? And you can see that we've been in a downtrend and price has been hitting these areas of resistance. But look what's going on here. This is setting up for the fall, right? It's not fall like falling down, but in the fall, Aussie dollar usually rallies, right? So look at this. It forms a little nest. We're pulling back, right, on the weekly. But when this turns, it's going to provide us with a lot of upside, right? Probably after the election as well. So we might get some more pullback. Let's go to a daily, walk it down, and look at that. Price rallying into, look at long wick Pinocchio bar. Pinocchio, he always tells a lie. Hey guys, let's get short. All right. Oops, sorry about that. And so the oops, because the Pinocchio, his nose grows long when he tells a lie. Well, he was a bear Pinocchio. He said, let's get short. Sorry. Yeah. And then with the price rallied, pulled back into the nest of moving averages. And that is a excellent signal. Who needs a signal service? I got a signal service. Like, all you gotta do is look at up here, go here, right? And then you're not taking any shorts. You haven't taken a short until now, right? You've got this nice little rally from here, and now we're pulling back. and we might pull back to that nest, which will match Fibonacci's. All these things will define this confluence, right? Let's even back it up to, let's go out to a 4-hour chart. And it gets really pretty, right? It's not just a work of art. You can see, but see, once we start fanning in one direction, the counter trend, we're going to get messy looking. But once this thing gets back in trend, that's another sign of a healthy trend where you have moving averages fanning out in one direction with relatively equal spacing. And then prices coming down into this area provide entries into the buy the heard the saying buy the dip. And then you want to be in the dip because you end up like, I'm gonna sell, trend line break, and then boom, right? You're on the wrong side of the trade, right? You'll say, oh wow, look at that big drop. And then you sell it, boom, you're on the wrong side of the trade. But if you look at the moving averages, they're all pointing up. So you have no reason to sell, right? The trend is your friend till it ends. And the moving averages are pointing up. We'll make this green because green usually means up and red usually means down. So this is pointing up. The moving averages are pointing up. Then we would look at buys, right? And then look at each time price pulls back, it pulls back to this nest of moving averages. And you can do other things. You can set alarms on some of these moving averages. Right click and set alarms. So when price comes down to that area, you can go to your computer and get your entry in, right? Get your groove on, baby. What price drops, came back into that. Look at that orange line. The orange is our 34 moving average. Look at that, 34. Hit that baby, right? Boom, right? Look at this tag of the 8 moving average. This is a 4-hour chart. Now, what could have got you out of, and you see prices breaking below the 8, now it's breaking below the 21, and now breaking below the 34. It's like, nah, I don't think I want to get long here, right? Why? Because we're breaking these moving averages. The short-term moving average broke below these, so I'm in a sell mode, right? Because and these are just starting to fan down, right? With that when that blue, that short-term or chartreuse, whatever color that is, turquoise, cross below all these moving averages, it's saying that we're maybe doing some type of a more severe pullback, right? They can combine it with Fibonacci's and really come a robust kind of system, right? But you can see on a 4-hour, we go down to a 2-hour, and look at that. And sometimes you have to change time frames, and something clear. When you went to the 2-hour, look at this. This is like, right? You should not be, from the 11th of September, you would not take a sell. Oh yeah, what here? Like, you're basically running in front of a truck trying to grab $1 when you're taking this kind of a trade. You want a lazy river. This is the lazy river, guys. Comes back down, extreme push to the south side. I'm in it to win it. Especially if it drops below this 55. That's like oversold and boom, right? Now, as you get top, it starts moving sideways. And the smaller moving average crosses down and crosses all these others. That's telling you that, hey, maybe we're topping. Maybe it was doing it here, but notice that as the trend gets older, its ability to stay above the moving averages, it gets closer and closer and closer to these other moving averages, right? Before, when it was bullish, look at much space. Look at all the space we have in between the moving average and price, right? The farther we are away, the stronger the trend, the younger the trend. But as we get older and over time, we're now able to get away from that. And now we're taking deeper corrections, right? And then finally, it just collapses. And this is where your structured people can come in. We have higher highs and higher lows. I always have a British accent when they say that. We have lower swing highs and lower swing lows, right? We're in a downtrend, right? So the structure fits in there. The direction of the moving average, we went from an upward moving average is upward sloping. We went from upward sloping to sideways to dropping, and now we're fanning out. So it may not be something that we want to get long. We may want to get short. If price rallies sharply into this nest, it may give us another entry into the market. Okay. So let's look at pound yen, GBP, JPY. Is when I traded. Pretty good, right? And you can see, I mean, look at this. I mean, right there. Look at that little band right there. Is that pretty? Look at that. He's like, you could mount that on a. We used to make string drawings, back in the 70s, like, to keep people off drugs and stuff. They either did like leather work or bead work. You always, in schools, we started taking nails and stringing them together and creating these little patterns and things like that. Handicrafts, always making stuff. My mom said, stop bringing all that stuff home, cleaning up my house with all this stuff, like macaroni glued onto like a turkey or something like that, and, your parents supposed to say, oh, that's so sweet. My mom was like going, get that crap out of here. Don't get in my house, right? I go, but mom, I made it for you, mom. Look at that. Taste my hand. I made it to a turkey. Okay. But anyway, we used to make this little art, string art. And you can even do it with like a ruler and start drawing and start creating that little net. And that little band was like really cool. Anyway, I digress. And then here you get that. Because you have shorter time frame, is that teal looking turquoise crossing above that. And as it's crossing and price is crossing too, well, then I'm not shorting. Think how helpful that is if I'm here in the market, right? And then all of a sudden I see this move and all of a sudden, I want to get short. It's like, no, this is going to keep you on the right side of the market. Is this helpful? Let me know. Give me a 3 in the chat box. Or a chat in we have a Thursday chat. Give me a number 3 if you let me get that. Live Forex Traders Den. Okay, see a chat. Stay in chat. There we go. There we go. So here we go. Here is our move up, following the moving averages, right? Yeah, no, Sean gave me a 3. Awesome. Very cool. Yeah. And then all the end pairs we're doing this, right? And then the sharp pullback. And then look, we hit the bottom, right? And another rally. Now what's going on here is interesting because the moving averages are still pointing up, even though price dropped sharply on this 4-hour, right? I mean, this thing dropped hard, but it hit this support right here, right? The moving averages, again, remember, we have different uses. It's not just trend direction. The trend direction is up. If you look at this, we have a nice trend. We have a nice trend up, right? And it's hitting this support area, right? And the shorter 2 moving average was dropping, but then it turned, right? The 8-period moving averages just turned, and the yellow one is pointing up. It's like the middle and the higher time frames have not turned, and price has. So that disagreement between price and the moving average kind of like says maybe we're not going to go down any farther, and maybe this is probably a good level to look at a rebound, right? I mean, and then you can just draw, if you just drew a trend line, well, there you go, right? We haven't broken that either. So it could be an additional confirmation to help you have more confidence in a trade, right? Or if you were selling, you were shorting, you're probably saying, okay, maybe I'm not going to do that anymore, right? For now. Then you go down to your lower time frames, and then you can walk through and see how we had that impulse move and the moving averages went nutso, and then they came back to rest, right? So everything starts as a moving average, right? Dropping down to 15. We're just coiling on the 15. We're coiling in the 5, right? I haven't seen what the 15-second would do. I don't think, because I really don't use moving averages in my trading All right, let's see what the 15-second chart looks like, right? Ooh, really, the same thing. Nesting, rising, cluster, pullback, nesting, rising, pullback, cluster, nesting, rising, right? All this is going to happen really fast because it's on this really tiny time frame, right? So it's doing its thing. But it's when this broke out from this nest, so do we go higher, right? I would guess, I would gander 92.65 by 69 that we would probably get long, because we can't look at this is acting as support. We have like a band of support here, right? Which would be very, very helpful. Are you guys tracking? Is this any questions? Do you guys use, let me know, yes or no, do you use moving averages in your trading? Give me a Y, right? Give me a thumbs up or yes or no. All right. We a new screen share. Okay. Yes. Awesome. What's your favorite moving average? Let's just see. Let's try along, right? Let's see if this works, right? We got like moving averages here. You know, this is acting as support. You keep dedicated colors. Yeah. Usually I like red over green, you know. I have my red ones, my longer term ones, and then my 200s was always blue. Now even here it's blue. And then well, let's see if we see now. Look, watch them. See how they're fanning out? Fanning out. We're getting a pullback, but they're fanning out, right? So this is real time, people. This is not simulator or back tester. So I know I'm of the belief, I'm old school, and I believe that you never trust a skinny chef. I'm not skinny. I eat my own cooking, and I like taking trades. I was trading with one of our private new students. His name is Antoine. And I said, well, you know, he was asking me about the pip and run system. He just started and he's really excited. And I said, why don't you go ahead and let's pull the trigger on a trade right now. And he pulled the trigger on the trade. And then within like a few minutes, it was up a couple $100, right? And he was completely shocked. It was like, oh, no, that's what we do all the time, right? And he was super, super excited, right? He even signed up for the full year mentorship, which is kind of cool, right? So we're going back. Let's see if we go back into the nest. The nest, and if you draw fibs on this, if I put fibs on there, I know it's not fib class, but you're going to find out that these areas of support and the fibs and the moving averages all come together. Now, you don't have to use fib numbers. You can use a 20. Some people use a 9. Some people use a 30. Some people use a 20. You know, they're not gonna be that far apart. I just, you know, I just find it, I believe in the mathematical relationship, you know, of price and the universe and, you know, God and all of that stuff. So I like using numbers that have symbolic meaning, because other traders kind of like believe in that too. And so you're in the same type of a ballpark if you're kind of like using the similar numbers, right? So here we go. See if we break to a new high. We're close to break even, right? Now, and you can see, look at the moving averages. Look at the structure, right? And yeah, it's only moving one pip. Yeah, it's a 15-second chart. Ignore the time frame. This is the real market live up front. And look, we're in the money, guys. Look, in the money, right? Yeah, but it's only one. But you're missing the point, okay? You get these people that miss the point. The point is that when you go out to a higher time frame, it does the same thing. Okay. Except you're so busy with your job, with your work, with your school, with your family, with your kids, with your church, that you're not going to see this on a higher time frame chart, right? You're not going to be conscious of it. You don't even know that it actually even exists. You don't know this kind of action exists. But by seeing it play out on a smaller time frame, it allows you to watch the process without having to devote your whole day trying to see this on a 4-hour chart. Now, I want to tell you, the 4-hour chart, if you're looking at a 4-hour chart now, it's not moving, right? This is like Ant-Man. This is micro world. This is like you're going inside the candle of a 5-minute. We're inside of a 1-minute candle. We're inside, right? If you're inside, you don't see any of this, right? And this is where we do the Asia session trading, because that's where the Asian traders are in these smaller time frames. And that's why I can come in here and hit this. I hit this for 10 standards. I got, at 10 right now, right? If I go 100 standards, well, I'm up $340, then I'm out, And this is, we're looking at, but look at the structure. This is what happens. We're not selling this, right? If you see this and then, I see some red candles, I want to sell. It's like, duh, we don't, friends don't let friends drive drunk or sell resistance and sell support and buy resistance, right? Does this make sense? And see, we're already up $115, right? Real time, right? This is real time. October 3rd, the day before my daughter's birthday. My twins are born October 4th, and I'm born October 12th. And so this is real time stuff going on, right? But it's not, you can see, look how the fan down, right? And you'll probably come back to the old high, maybe, right? Show me some dollar signs if you found this helpful. Now, is this something that you guys knew before? Let me know. In fact, if you were watching this live, type the word live in the chat box. Let me know you're watching live. And if you're watching this on a replay, go ahead and type replay. If you're watching it on YouTube or X or something as a replay, you can type replay. Okay, see, Sean got some dollar signs in there. I mean, he's here live. Very cool, very cool. Okay. Live and watching, all right. Alive and kicking, all right. So we got, and prices is moving. But look at the moving average. See how they're fanning and they're in order. Look, shorter time frame, 8. The yellow one here is 21. We have a 34, followed by the 55 in red, followed by the 100 in pink. But where is that 200? The 200 is blue. It's here, right? You know why? Because we came down so hard that it dropped us below the 200, right? So we're just above the 200, right? And we can hold that, right? Let's see if it let's see. Look, it came back and tested. Look where it came. Came back and tested this moving average here, right? Came back, look, bounced off and gapped up. Look at that, right? And look how we're getting farther and farther from that 34, right? The 8's kind of like turning down. Oh, it's going negative, right? Let's see if it bounces or it gave us a bounce. Oh, it'll rally. Look, came down to the 34, right? And just watching is, set up your moving averages, look at the smaller time frames, and then you can like, oh, I could have gotten here, I can get on here. You'll start learning, and this pattern will repeat itself, right? See, now we got the shorter time frame crossing down now, and now we're moving on down. So when we were up like $100, because because taking our $100, right? But then look at this. Watch this. That's why I do that, because I know that we're a bounce right there. We got a nice bounce. The 23% retracement, the 34 moving average, boom, right? New high, new high, new high, new high. Give me my $200. Boom, get paid, right? So that was our entry and our exit, right? So we got long here, we got out there, we picked up $100. Okay. So that's again, to recap what we do with moving averages. Moving averages are still a powerful tool. It's a way of determining trend direction, tells us where support and resistance. It also shows us confluence, where a bunch of multiple moving averages come together. They also give us a way of entering the market, right? So let me go ahead and stop sharing here, right? This will keep going. But I hope you found that very exciting, very informative. It's a simple system. It's not the best system. Pip and run is the best, but it'll give you a framework. If you let me know in the chat box, show me a couple of 777 if this is something that you could use in your trading today. Let me know. Let's drop some 777s in there, and that'll let me know that this is useful and helpful. Okay, it'll keep you on the right side of the trade, especially if you're frustrated, you're getting on the wrong side of the trade. This is something that can help you. It's better than walking. No, it's not a Lamborghini. The Lamborghini is the pip and run system. But if you want to get from point A to point B, you want to make some money, and you're going to prop challenge or something. This multiple moving average strategy, the McLeod multiple moving average strategy, is absolutely free, and you can keep your right side of trade. I've had people actually win trading contests using that strategy, exact same strategy. Now, that's my free stuff. This is how much you can get benefit from my 30 years of experience, right? So if you want to work with me on an ongoing basis, you can always click the link in the description below, and in that description, it gives you we have something called a Profit Accelerator Zoom chat. The Profit Accelerator Zoom chat, right? PAZ, because I'm going to analyze your charts. We can talk about a blueprint, see where your challenges are, and line up a blueprint that'll get you to fast profits on a consistent basis. And that's what you want. You want to stop struggling. You want to stop guessing, right? And so that profit acceleration call, it's like 30 minutes, and I can break it down for you, all the things that we can improve on. And if you want to work with me, and if you're a good fit, and we feel that we can work with each other, and you qualify for our program, I can share with you what we do and how you can work with me on an ongoing basis. Okay. We also have some other free resources, like there's a free master class. You click that link, and that gives you that 4 pillars and 6 figures. That's a free master class, which will tell you who I've helped, how I've helped them, and how I actually came up with the system. And actually has a sample of how I enter and exit trades, and how we use the My Market heat map and all the tools that we have at our disposal to tear up the market and to beat the banks. Okay, and that's what it's all about. And I've also got another ebook in there, a handout guide, 7 mistakes that traders make when trying to pass a prop challenge. You can also click that below as well. Okay, so make sure you check out my other videos. Make sure you like and subscribe if you're watching this on YouTube. And thank you for coming to the Thursday Night Live. And I look forward to helping you become a profitable trader. Again, my name is Dr. Greg McLeod from Elite Traders University, based here in Las Vegas, Nevada. Love you. Peace and pips. Talk to you later. Cheers. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!